Hello, I'm Jessica Amir for the Finance News Network. Joining me now from ERM Power is Managing Director Jon Stretch. Jon, welcome to the Finance News Network.
Thanks, Jessica.
So first up, for those new to the company, can you give us an introduction?
Sure. ERM Power is an electricity retailer to commercial and industrial customers in Australia and in the US. We've been in business now for about 10 years, and in that time we've come from nowhere to be number 2 in commercial and industrial in Australia. In fact, 1 in 5 businesses, governments and industrials purchase their electricity through us.
So now to your FY17 results. You just released them back in August. What were some of the highlights?
Well, we had a good year. Our FY17 EBITDA, and that's earnings before interest, tax, depreciation and finance charges, which is a standard energy industry measure, we delivered an EBITDA of $78.4 million, which is a 5% increase over prior financial year.
So what drove that result?
Well, we had a good year in Australia, our Australian business. We got some load growth, but most importantly, we saw an improvement in margin. We were forecasting a margin of about $3.50 a megawatt hour, and we were able to deliver $4.11, which was terrific. Our generation business at Oakey and Neerabup also performed at the top end of expectations. And in the US, we were really able to get great growth of the business. We more than doubled our in-year load to 3.8 terawatt hours. And whilst we didn't hit the gross margin targets that we had set, our overall result for the business was above expectations.
And Jon, can you tell us about the dividend?
The board approved a 3.5-cent dividend fully franked for the second half, taking the full year total to 7 cents fully franked.
Now, can you tell us about the operating environment that ERM Power works in?
Pretty much the front page of every paper on most days talks about the big issue in our industry at the moment, and that's high prices. And the commercial industrial customers are not immune. You can imagine if you're a manufacturer or a bank or a miner where energy is a high part of your input costs, the fact that those prices have doubled over the last couple of years has a real impact. So we're working with our customers to help them better understand and see what's driving that price in terms of the forward market and help them optimise the price that they're paying today. And at the same time, we work with them on the demand side. How can they use power more efficiently and improve their energy productivity to better operate their businesses? You know, one of the interesting things, Jessica, ERM Power has by far the highest customer satisfaction ranking in our industry. In fact, we've had the highest ranked customer satisfaction for the last 6 years straight. This year, our score of 94 out of 100 was not only by far and away the highest customer sat for the industry, but it broke the record for highest customer satisfaction in the 21 years that this monitor has run. So that tells you, even when customers are really hurting with the high prices, the insights that we can give them, the help we can give them on managing their energy productivity has been really well received.
Now to your strategy. What's your objective and how's that progressing?
Okay, well, we think about the business in the following way. Our Australian retail and generation business will continue to perform well now and into the future. It's a business that's running well. We're investing heavily in the energy solutions component. As I said before, we can really help work with our customers on not just managing their supply, but managing their demand, managing the way they effectively use their energy. And in the US, we're taking our proven successful model in Australia and translating that to continued growth.
So back home now, what do you think the government need to do to reduce power prices?
Well, look, the government's taken an important step in the last year or so. They've said it's not just about sustainability, it's also about affordability and security. So that's the trilemma that they're trying to solve, and are in the process now of bringing in policy that supports those 3 objectives. But without doubt, the biggest thing we have been missing is national, enduring energy policy. Because of the policy vacuum, we have seen states become misaligned with the government. We've seen government and opposition playing oppositional politics. And really, we now need to go forward and focus on that energy trilemma: affordability, reliability and security, as well as sustainability, in a national and enduring way.
Last question now. What's your outlook for FY18?
Well, look, in Australia, we're going to see some modest load growth and market share gain from 18.5 terawatt hours to 19 terawatt hours in FY18. Our gross margin will continue to improve. We delivered $4.11 per megawatt hour in Australia in FY17. In FY18, we're outlooking $4.40. In the US, we're going to continue to see great load growth. 3.8 terawatt hours in FY17 will grow to 7.5 terawatt hours in FY18. Our margin will remain stable in the US at about $5 a megawatt hour. And our generation business in Australia, we're outlooking our Oakey Power Station to deliver between $14 and $16 million of EBITDAF in FY18. So overall, that will give us double-digit EBITDAF growth.
Fantastic. Well, Jon Stretch from ERM Power, thank you so much for your time.
Thanks, Jess.